It's the trade recap um, for yesterday. I took one loss, and yeah, I was looking for this. Yeah, I sized heavy yesterday. I don't know what was going on. Fell out of my rules and stuff. But yeah, I took a hefty loss, and yeah, I paid the price by taking the loss. And if I pull up my oh, I took two losses yesterday. Yeah. So I lost more than 2% of the account, and yeah, this is the big loss. And yeah, I'm down so much right now from being up like 300. And yeah, but like I said, I am trying to pass the accounts, so I'm trying not to do stupid shit. But I'm at the same time I'm also doing stupid shit. So I'm trying to bring myself back. And for the rest of the week, next week, I think I'm only gonna be focusing on one model, which is the Forever model. And basically, it's kind of like the model I'm using right now. But the thing about my model right now is I'm only looking for an inverse fair value gap, uh, sweep of liquidity, maybe not SMT VPS, conviction, V-shape, reaction of previous fair value gap, and good drawn liquidity. So basically, the forever model uses this inverse fair value gap model, but the thing about this that makes it different from the IFG model is the use of a CICD, change in state of delivery. So it's not much different from the model I'm using. So I'm not kind. I'm. It's not like I'm changing models, like I'm changing strategies. It's Let me, if I pull up my trading view, I can show you what I mean, like what I look for in a trade, what I'm trying to look for next week. So um, let's go maybe back to like Thursday. So let's just use this example. I'm not sure if this is even the model, but like if this is the is but yeah. So we can see maybe this was a liquid sweep, or even an SMT liquidity plus SMTVS. And then I think like I'm not gonna switch time frames because it's gonna take me back. But this looks like maybe 3 minute or 2 minute fair value gap. We also have a fair value gap here, so we do get this inverse. This is so basically I'd take this. This is a model I'd take right now. I'd put my stops. I'd put my this is where I put my entry, and my stop loss is if we get a candlestick above, if we get a body close above this inverse fair value gap now. And I'll target this low, because this is the what's it called, this is the sell side after sweeping a lot of buy side, and we've been really bearish. So I could even target maybe even this, or even this. It like depends on the RR, and also if you're comfortable with risking this much, because this could fail. We could see this sweep and then go higher, but this also works, as you can see. But what I'd want to see from a Forever model, which is by what's his name, Justin Werlin, the goat of psychology, is SMT. Doesn't have to have an SMT, but SMT makes it even more high probability. But what you want to see is a liquidity sweep. You want to see an inverse fair value gap. So this is the inverse fair value gap. And I'm going to go back test this today, and I'll post my results maybe at night or something like that. So now we have an inverse fair value gap. So we want to see a change of state of delivery. Basically what that means is you see these like see these bullish candles up. Now we want to see bearish candle close below this now initial bullish, what's it called, bullish bullish move up. So now this is what we'll call a change in state of delivery, which now I'll add it to my templates since I'm going to be looking for it now, and I won't take a trade if we don't have a change in state of delivery. So now this is my change in state of delivery. We'll put this on the left, no, on the right and top. Yep. And then save change to the delivery. Yes. So now this is my change in state of delivery. So what this model basically entails is, on the higher time frame, we've set liquidity, we've rebalanced, we've either rebalanced into a previous fair value gap, or we've created a manipulation leg that's sweeping liquidity. So this could be two ways. We could either sweep liquidity and not rebalance into a fair value gap, and we sweep liquidity, forming a manipulation leg, reacting off a fair value gap, and then going downwards. Or we could form an SMT here by maybe rebalancing into a fair value gap and not sweeping liquidity, the main buy side, and then moving lower. It just depends on the type of trade. And then we want to have good conviction on the drawn liquidity, which on this day was bearish. So we could aim for, like, next week I'm only going to be aiming for 1 to 2s, and if price action is really good, like if I put my 1 to 2 here and we hit my 1 to 2 maybe in the next like 10-15 minutes, then I'm like, okay, now that's good. So I could leave a runner. So my runner would be to the next drawn liquidity, which is here, because we are bearish. So this would be my final trade, 4RR trade. And basically I would have been stopped out because of this week's, but just for context, I'm gonna be putting my stop loss to break even after I've hit the nearby liquidity zone. So I wouldn't put my stop loss here, because we're inside of a value gap. I'd put it here. So if I decided to hold a runner, then I'd put my break even here, and I'd take out most of my position, and then I'd let the trade go. So as you can see, we wouldn't have hit this trade because my break even would be hit, but we would still bag in a 1 to 2. So that's what I'll be looking for next week. And this whole weekend I'm going to be back testing this forever model to see how really profitable it is, because I don't know, I feel like inverse fair value gap are happening way too often, and it's way harder to identify which one is the correct entry and which one you should be looking for. So yeah, that's my problem right now. And I'm not saying the inverse fair value gap model is bad or it doesn't work. I'm just saying I want to try something new because I'm still early into the trading space, with almost more than a year, but not more than half a year. You know what I'm saying? In a few 3 to 4 months, I'll be 1 year and half a year or 1.5 year experience in the market. So until then, I have enough time to mess around and figure out. And yeah, so that's what I'm going to be looking for next week, the whole of next week. And my trading rules for next week is only take the forever model, and my next rule for next week is only take 2 trades per day. My next rule is, if we get a big win, step off the market, no second trade. Okay. And my next rule is, if we get a heavy loss, step out the market. And my next rule is only take 1 to 2 RR, hold Rana if possible, but withdraw 80% off. So I'm not like the whole of this week. I shouldn't be red this week. The thing about me and this week is I'd aim for like 1 to 3, 1 to 4s, and not take my TP until maybe half, like 3/4 of my position of my entry. So yeah, so this is my the rules I'm gonna be applying next week. If I fail the challenge next week, I still have around like $200 before I fail. So I'm only gonna be risking, okay, let me even add that rule. Only risk 10 to 30 USD. If loss first trade, risk 10 USD. So basically what this means is if I really like the trade, I'll risk $30. If I'm not like entirely sure that the trade, like if I'm not 100% confident that the trade will work, I'll de-risk. If we do get the win, then if we do get the win with $30, leave the market. If I decide to take the first trade and I risk maybe $15 or $20 or $10, I'll take another trade. So these are the rules for next week. Only take the forever model, take 2 trades per day. If you get a big win, step off the market, no second trade. If you get a heavy loss, step off the market. Only take a 1 to 2 RR, hold runner if possible, withdraw 8%. So if my trade is 1 to 2 RR, then this would be the trade. Stops 1 to 2. This would be my trade 1 to 2. And if I get this 1 to 2 and I see was still bearish, this still draws in liquidity, I'll withdraw 80% of the trade. Let's say 50. I have $50 floating. I'll withdraw 40 and let the $10 go, because it's just $10. So and then I'll move stops to break even. So my initial thinking process of entering a trade is, when I'm not going to move my break even like I usually do, because yesterday I was so mad that I got stopped out so many times because my break even was so tight. And the thing about it being so tight is because of this, like we had so many impulse moves the whole of the week, like the whole time last week, this week I mean. So what price would normally do, like if I found my model, like I'd enter here, and then we'd have bearish candles here forming CBs. So what price would do would come back to this fair value gap, which I did enter on, and maybe wick down and then continue higher. So what I'll do is, let me give an example here. So what I'll do is, let's say this was an SMT with ES. We can see this took out this low. Oh, I can even use this. So this is a fair value gap, and this is a high inside a fair value gap. So let's say ES took this high, but we didn't take this high. So this would be my SMT. And if I was bearish on this day, which I'm not sure, was I bearish? Yes, I was bearish. So if I was bearish on this day, so if I was bearish on this day, and we had conviction that, okay, now this high was taken from the SMTs, so my next draw on liquidity is here and here, because this is like relatively equal lows. So I'd say, okay, this is my draw on liquidity. So we have our inverse fair value gap, which was formed, and then we have our change in state of delivery, which is this. So what I would do in this situation was, I wouldn't take this inverse fair value gap. Okay, why? Because I'm only taking, as I said here, I'm only taking the forever model. The forever model needs a change in state of delivery. So let's say we got this candle, but it closed here, that's not really a change in state of delivery. So let's say I was looking, and we saw, okay, now we closed so down, closed so down. My RR is not really efficient, because if I took the trade here, look at this. This would have been a one, like barely a 1 to 1.5, trade. But look at what if I entered here. This would have been an easy 2.64 RR trade. Why would I enter here? Is because we're tapping into this changing state of delivery once again. So once we get, like, the only time I'll take this IFG model aligned with this forever model is if this candle is the one that created the CICD, the changing state of delivery. But since we formed the changing state of delivery and we pushed so low, I don't press to come back, tap into here, and then I'd enter. And I wouldn't just enter from this reaction. I'd wait for the candle to wick down, showing that we're also respecting this fair value gap. We're also respecting this fair value gap, telling me that, okay, now we have the drawn liquidity aligned. So we are respecting this, we inverse this, and let's say this candle came down, came up, and then pushed lower. Like, it came all the way down here, pushed lower, and then came and closed here. I'd enter here. What's another scenario I'd enter in? If we came lower, pushed up, and then, like, we came up, and then we, instead of closing above the 50% mark or above this CICD, we wicked down at the last second, and before reversing, so I'd enter. It just depends. It's okay, do I have SMT, do I have IFG, do I have drawn liquidity? Am I gonna wait for this candle to push down, or am I gonna just enter immediately? It just depends on how I'm feeling, like how confident I am. But to be very specific, this is how I'd enter. Reaction of the CICD, retest, and then, boom, easy. 3 RR trade. I could even put my stops over here, and it's still a valid trade, because now not only would this intermediate low come push us higher, but it won't even wick here. So I could even say, okay, I'm putting my stops here, or I'm putting my stops up here, to be even more safe, on the safe side. Because if we take this low and we don't come to these lows, and we are bearish, like, we're forming on the sell side of the curve. We've been so sell side lately. So I could even say, okay, stops here. If this fails, I'm off the market. And this is what I'm looking for. This is the forever model that I'm going to be looking for. And no, I am not giving up on the inverse fair value gap model. I'm just making it clearer, because this looks much clearer to me. This forever model just looks way cleaner than the IFG model, because the thing about the IFG model is there's too many IFGs nowadays that with this price action, like, look, for example, this is a very good example. We formed an IFG, we formed the IFG, we were inside a fair value gap, maybe even 50% of this fair value gap, we swept liquidity, and we formed an IFG. And usually what I would do is put my break even here, but look, yeah, we got stopped out. Why did we get stopped out? Because first of all, the drawn liquidity was lower. Second of all, yes, I don't know where price would go, when I'm here, but to make it even better for me is changing state of delivery. So I'd want a candle to close above here, because this is the last bullish candle, I'd want a candle close here, because this is the bullish scenario, not the bear scenario. So this is the down close, this is the bearish candle, and then this is the bullish candle. So I'd want this to close above here, and I'd be okay with taking the loss. But then again, drawn liquidity was lower, but yeah, you could have conviction of going higher, but I was just so bearish the other days that this would have prevented me from taking a loss, because we didn't have a change set of delivery. So yeah, this, sorry for yapping a lot, this is just by the way. So yeah, this is the trade, and I'm only gonna be aiming 1 to 2, 1 to 3, or 1 to 1, 1 to 2, 1 to 3. And for this trade I would have closed all my position here. Why? Because if you look at the left side, there's not much you're really targeting. Why? You could target these lows, which I don't even, yeah, probably got hit. But who is waiting? Thursday and then Friday 8 a.m., you know what I'm saying? So the drawn liquidity was perfect. Was we formed, like, we chopped around manipulation leg, formed SMTs, came down, took out these lows, and yeah, that's and yeah, we could have targeted here, but there's no reason to target here after you bag a 3 RR trade. So yeah, this is the forever model I'm gonna be following. I know I'm gonna be profitable using it, just because of how often I see it happening in the market, but I don't really take it because I'm only taking one model, you know what I'm saying? So yeah, we should have for this to work, we wanna, this will eventually work, because look, there's so many down, with so many bullish candles that you can't really mark, okay, yeah, this is the change set to delivery, which is not true. So the change in set to delivery here would probably be here. It's just so hard to like know the change in set to delivery once you get like freaking, you know. But yeah, like I said, this is my rules for, I'm gonna screenshot this and put this in my Discord so that I know. And I'll always look at this rules and management trading plan. Boom, here's my trading plan. So every day I'll wake up, I'll look, only take the forever money, only take 2 days per day. If we get big, we stuff off the market. I'm trying to go back to break even. So for now, I'm only gonna be risking 10 to 30 USD. Once I'm back at 5,000, once I'm back at break even, I'm gonna now risk 50 USD. And yeah, afterwards, you know. But yeah, I hope price action would be better. This week was so horrible, and I know that the forever model was not suffering, but the IFG model was suffering, like serious suffering. So yeah, I'm gonna go back test this today and tomorrow, so I'm ready for, you know, Monday, Tuesday, Wednesday, Thursday, Friday, you know. So yeah, this, you know, if I was to take a trade, let me just like trade, put what's this, come here, if I was to sell limit, okay, remove this, I put my sell limit, here, and then no, my, is this my sell limit or buy limit? I think it's a buy limit. You know, I don't use limits and stops and those things, so I don't really know. So if I was selling, okay, it is a sell limit, okay. So I put my sell limit here, I get tagged in. Once I'm tagged in, I put my TP here and my stop loss here, and as you can see, $70 to $263. So yeah, this is how I'm gonna be placing my trades, and I'm still gonna be using a soft stop loss. But the thing about the soft stop loss is, like, if we form an IFG here, I'll use this, so I won't really care if price comes here and then goes lower. I'll only use this. If price closes above here, I'll close my trade, but if price doesn't, I'll move on. So yeah, sorry for the yap. This is the model I'm gonna be using, and I'm going to backtest this, I think, right now. In a bit, let me go and refresh a bit, look at the sun and shit, you know, and come back. So yeah, thanks for watching. And just okay, Jill, thanks for watching.